Time now for the markets with Leighton. And Leighton, you say a Mississippi ethanol producer is losing money?
That's right, Artis, and unfortunately the decision has been made to mothball the plant in question already. Also in the markets this week, very strong exports support soybeans. Sinking pond bank prices continue to threaten the catfish industry, as one analyst describes a favorable picture for farm gate milk prices. The Bunge Ergon Ethanol Plant located in Vicksburg is expected to cease operations by November 30th. Bloomberg News reports the decision is based on the poor margins involved in making the biofuel right now. Analysts at that news outlet estimate that ethanol producers are losing 30 cents per gallon based on December corn and ethanol futures contracts. A spokesman for Ergon says the Vicksburg plant can produce 54 million gallons of ethanol annually and may be closed until next year. Monthly world supply and demand numbers from the USDA will be out by the time you see this program. Alan Brugler reports most analysts expect there will be a yield increase in the numbers for soybeans. In the meantime, Brugler says strong exports have been the big headline for the bean pit.
We've had over 60 million bushels each week for the last 2 weeks. The record's somewhere in the mid-70s, but very strong exports shipments, and we expect that to continue. Probably for the first 6 months of the year, we'll be up 40 to 50% over a year ago on exports. Again, that's a result of the drought that they had down in South America last growing season. And so the U.S. got all the business, and now it's got to be shipped. The big question here is whether the farmer will sell enough of the beans to the shipper. We're seeing some pretty strong basis bids, and the market's trying to buy that grain away from the farmer, but he's saying, well, it's down quite a bit from where it was in August, and I think I'll just wait. So a little firmness there.
Well, soybeans are also the subject of our trivia quiz this week. Let's take a look at it now. We're asking, where were soybeans first introduced as a row crop in the United States? The answer is either Georgia, or Mississippi, or Alabama, or Tennessee. You'll find out in a few more minutes. The decline in the live fish price in the aquaculture sector continues to be a major concern to catfish producers. Extension economist Dr. John Michael Riley provided some analysis of this market on Thursday morning. John Michael, let's kind of summarize where we are as far as catfish right now.
Well, we've kind of reverse script here. Prices have been declining for the most part throughout 2012. Reached a peak about a year ago, August of 2011, and have since, they slowly started declining throughout the remainder of 2011, and they've really started dropping pretty fast here in 2012. They've lost about 45 cents a pound, which is roughly about 8.5% per month over the course of 2012. That's farm bank prices, and so that's not something anybody really wants to hear that's in the industry.
And the result of this, as we've talked before, we've seen fewer ponds in production, for one thing, right?
Well, the drop in prices, I think, is more just an economic, general economy is not doing well. Catfish is one of those that's not a staple item that people, reach for, and as a result, demand has really backed off. Now, the good thing is that supply, as you mentioned, has dropped, and that was really what led to the price increase. But unfortunately, we've seen, even though sales have declined, continued to decline, prices have still dropped as a result of just weak demand.
Now, as far as at the pond bank, feeding is down, right, as far as since we've got fewer ponds. I mean, there's obviously fewer production in the pipeline. That
is true, but feed costs are still such a huge factor, and we saw feed prices just really ramp up throughout the summer as a result of the drought. It's much more significant as opposed to other livestock species because of the fact that they are heavily fed from the time they get into the pond till they leave. It's as John Anderson would always say, it's an underwater feedlot, and it makes up such a large percentage of the cost that I wouldn't be surprised if, as a result of the high feed prices, we don't continue to see a little bit more of a decline in terms of overall production numbers.
And far as wholesale prices, what restaurants, grocery stores pay, that has come down some, but not as dramatically as a pond bank price.
It has, and it's still dropping. So as these numbers continue to drop at the farm level, I wouldn't be surprised to see it drop up the supply chain.
In the dairy sector, it's firm prices for the milk market right now, not declining. Analyst Naomi Bloom says she expects a favorable picture for dairymen for a while longer.
The milk market right now has actually been more affected by cheese. The block barrel cheese price got up to a resistance area on charts near 208. If it can get through there, then it'll go upwards to about 214, which was the summer highs. And cheese demand has been strong lately, and of course we're heading into holiday season, so that's part of it. The other factor with milk right now, which is going to keep probably the November-December contracts between 20 and 21, is that our production is actually down. And the reason production is down is because we've been bringing more cows to slaughter. And over the last 9 weeks, the slaughter rate has been over 60,000 head a week, which is a substantial number. So that's why the production is down. And then even looking at first and second quarters of next year, because demand is strong and we expect production to stay lower, it's keeping that market price between 18 and 19. So for now, prices look to stay firm, but we don't have any reason to see anything go substantially higher or lower.
Only enough time remaining in our segment for the answer to the trivia question that we posed earlier. Georgia is correct. A is the right answer this week.